In this track and trading training video, I want to take you through and talk to you a little bit about the Bulls and Bears new ribbon indicator. Now, the ribbon indicator is a filtering system that's designed to help us filter out some of the less profitable signals given to us by the Bulls and Bears. And what it does is helps us actually read the trend on a longer term basis to help us give us some kind of an early signal or confirmation signal that the market is going to continue in the overall trend, or if it's a great time to be getting into or entering this market. So I want to go through and just talk about several steps that we look at while we look at and analyze the ribbon indicator in conjunction with the Bulls and Bears. Now, of course, the Bulls and Bears being the tool that turns the price bars red, yellow, and green. Yellow being the neutral time zones right here. Green, of course, being a nice long uptrend. Again, yellow going neutral. And then red, of course, this is our downtrend. Now, we're going to go through and look at that combination of color changeover in relationship to the ribbon indicator. So the first thing I want to talk about is the short-term retracements given by the ribbon indicator as an entry signal or going long. Now what we do is we come in here, and you'll notice that with the Bulls and Bears, we get our buy signal right in here. The color changeover from yellow to green, that's our buy signal. And so the ribbon indicator, as you can see, is coming down and making the changeover to confirm the Bulls and Bears changeover itself. So here's where you start seeing an idea that the market is starting to change. See how the very first or the fastest moving average is beginning to cross over the second moving average. So this is an early entry look that gives us the idea that we need to start preparing for a changeover from neutral to bullish. And then as the market progresses, we look for a continuation of that type of a crossover pattern. The next thing we want to look for is another short-term retracement. Now you'll notice that once the ribbon indicator crosses over and begins to actually fold over on top of itself, it will begin to retrace a little bit. This is where you start to see a pullback. Now we know markets move in waves, 2 steps forward, 1 step back, 2 steps forward, 1 step back. So as the market starts to pull back, you'll notice that the ribbon, the shorter term ribbon indicator, will start to move with that movement of the market. But you'll notice that the longer term averages are staying more steady. They're steady, and they're longer term look at the view of the market. And so we use these as a combination, one with the other. So now let's go on. The next thing we look for is a moving average as moving averages diverge, increasing risk of a reversal. Now, of course, we start looking also at our Elliott wave, X, 1, 2, 3, 4, 5, and we recognize and realize that this market is reaching up into the fifth wave of our Elliott wave. And we can start looking for a retracement there as well. So as that happens, you'll notice that the Bulls and Bears begins to switch or change colors from green to yellow, which is taking us back into the neutral zone, pulling us back into that Fibonacci sweet spot that we talk about. The ribbon indicator is a confirmation or an early entry seeing that this market is starting to retrace, and we look at the direction of the overall direction or trend of this shortest term moving average. And you'll notice that it's starting to turn downward, and as it comes around and begins to turn downward, you'll notice that it starts to cross the second moving average, and of course that's when the Bulls and Bears changes from green to yellow, indicating that this market is coming neutral. Now, as the market swings down around through this low valley time frame, you can see that the ribbon itself is beginning to converge. And then as the market begins to rally once again, you'll see that slower term moving average pops back out above, and the market or the ribbon begins to go into a long, even ribbon again. This is a strong confirmation that this is a good, strong, trending market. So the next step is number 4, and this is where we come through. Strong retracement indicates changing short and medium-term views, but long-term views hold firm. Notice that the long-term view, this is the longer-term view down here, these are holding firm, but the shorter-term views are showing that there's some waves in the market. Now think about the wave indicator, this indicator here, or the ribbon indicator. Think about it like water in a river, and the actual market price bars themselves are like rocks in the river, and they cause the river to actually fold back and forth on top of themselves and to cause disruption. And when you start seeing the disruption in the river or the disruption in the ribbon, this is where you start seeing where markets start to change direction. And so this is a warning signal for you. But notice that the long-term signal, the longer-term moving averages, are still long and straight and smooth, giving you an indication to hold tight because this market may have some additional upside potential. The next step, step number 5, is a short-term retracement signal recovery. So you'll notice that that's what we see coming up out of this little group here. This is where we see the price bars of the underlying indicator, the bulls and bears, turning from yellow to green again, and that is our short-term retracement signal recovery, which is confirmed by the ribbon indicator coming up out of that same turbulence that we see in the overall long-term flow of the ribbon indicator. The next step is the moving average divergence, warning of another reversal. Now, as this market begins to approach a high upward peak, as it did here with number 3, you'll start to see this ribbon start to rotate, start to turn and come back down. As you start seeing that, that's where you're going to get the divergence or a warning of a reversal signal. And it generally comes, of course, after market makes a nice big strong run like this. So we look for this early signal of divergence of the top and the very fastest moving average to begin to rotate and come off the top of this trend. And as that happens, we start looking for the market to change directions and for the bulls and bears to change from green to yellow. And that is a quick summary of the 6 steps of the ribbon indicator. Now I want to take you through and give you some chart examples of how this can be used. Now here's a chart that we're looking at, and you'll notice that we have a convergence of the ribbon, and whenever we see a convergence of the ribbon, or what we call the squeeze point, this is the time frame in which we start looking for a buy signal from the bulls and bears. A yellow followed by a green, or vice versa. You can get a yellow followed by a red, a sell signal. And you'll notice that the best and the strongest signals come when the ribbon is closest together, where all the ribbons come together into a converging line. That's where you're going to start looking for and find the strongest buy signals or the strongest sell signals. And then once as the market begins to rally through the long green trend, this is where you start seeing that the market ribbon starts to widen out. Now notice right up here at the top of this trend, notice how that ribbon starts to change directions, and you can see it curling around that top. That's an early signal that we're starting to top out in this market and that we're looking for a retracement. And then as the market comes and swings down off the top of that, notice that we start getting a crossover of the ribbon, and the ribbon begins to fold itself back over on top of itself. Of course, the bulls and bears comes in with a narrow sideways channel here, indicated in yellow, and then we drop out at the bottom of that, and that's where, again, you'll start seeing the ribbon indicator starting to fold over the top of itself. As that happens, you'll notice that this comes along and we go sideways again. Once we go sideways and that ribbon starts to pinch together into the squeeze point, this is where you're going to get another indication from the bulls and bears, and that's a strong signal, a strong buy signal. And of course, the ribbon being very narrow here starts to widen again as the market starts to rally up through this rally point. Let's go on to the next one. Here's another example of a nice big long trend, and you can see a good example of a strong buy signal right in here where the ribbon is very close in almost a little squeeze point or a narrow channel. And then as we get our buy signal, the market begins to rally once again, and then you can see points where the market starts to pull back. Like right here is a good example of where the market starts to pull back, and then you see how the first or the top indicator or the top ribbon line starts to rotate over and come back on top of itself. But notice it didn't cross over. It didn't cross over because the market started to rally once again, giving us an indication that this market has more upside potential. And as the ribbon is wide, it means a strong trend. And so this is a good example of seeing a strong trend in the market indicated by the ribbon indicator. The next one, here's another example. Notice that we have a nice wide ribbon. A wide ribbon equals a weak sell signal. Notice that's what we're seeing here, a wide ribbon with a weak sell signal. This market didn't follow through. Now the bulls and bears, of course, tells us when a market changes from bullish to bearish and bearish to bullish, but it can't tell you how long that trend is going to last. That's where the bulls and bears ribbon indicator can come in and give us a little bit better insight. And notice that it didn't have a real tight squeeze point around here. Okay, and then as this market begins to rally once again, we come up here and we get a sell signal, and notice how the indicator started to fold over itself and has this nice tight squeeze point indicating that this is a little bit better time frame to be getting into this market. The market drops, goes short, and we see a nice strong trend with the wide ribbons. And again, we're keeping our eye very close on this short-term moving average down here. We're watching the actual direction of the moving average, visually looking at it for the retracement, and you'll notice that once again as it starts to rally again and come into this time frame and starts to fold over the top of itself, this is an indication where it confirms the bulls and bears buy signal, and away we go again. And that's just a quick rundown or a few examples of the bulls and bears ribbon indicator and some of the steps and points that we try and look for when using the ribbon indicator.
The content of this program does not constitute investment advice. This program is to help enlighten you to the opportunities for further education and training techniques by industry leaders. This should not be considered as a solicitation to buy, sell, or invest in securities, options, futures, or Forex. Remember, trading does involve the risk of loss. Past performance is not indicative of future results. Stocks, futures, options, and Forex trading is not suitable for every investor. Please consult a professional regarding your financial situation before placing a trade.